Hello, my friends and students. Welcome back. Today we are discussing about the limited company, a one type of business structure. In this topic, we will discuss the features of limited company, advantages and disadvantages of limited company. A limited company is a type of business structure that is legally separate from its owner. It means that the company and owner have a separate account. It is a company that have been incorporated and registered with relevant government authorities, such as Companies House in the UK, Securities and Exchange Commission (SEC) in the US, Securities and Exchange Commission (SECP) in Pakistan, Securities and Exchange Board in India. The owner of a limited company are known as shareholder, and their liability for the company's debt is limited to the amount of capital they have invested in the company. It means that their liability of shareholder is limited till their investment money. In case of loss, their personal property will not sell out. Like in partnership and sole trader, they have unlimited liability. But in limited company, shareholder have limited liability. This means that their personal assets are not at risk if the company become insolvent. In limited company, the management of a business is typically carried out by a board of directors who are appointed by the shareholders. The directors are responsible for the day-to-day running of a company and for making strategic decisions that will help the company to grow and propose. Limited company are subject to various legal and regularity requirements, including the filing of annual reports, the appointment auditor, and payment of taxes. However, they offer a number of advantages to the owner, including limited liability, the ability to raise capital by issuing shares, and potential for growth and expansion. Key features of limited company. The first feature is limited liability. We already discussed about that. Limited company is that owner and shareholder have limited liability. This means that their personal assets are not at risk if company incur debts or go bankrupt. And this is a key advantage, key feature as compared to sole trader and partnership. Second feature is separate legal identity. A limited company is a separate legal entity from the owner. This means that company can enter into contract, sue and own assets in its own name. Shareholder. Limited company are owned by shareholder who own a portion of company's share. The shareholder are responsible for appointing the director of the company and making major decisions such as changes to company's article of association. Directors. Limited company are run by board of directors who are responsible for day-to-day management of a company. Directors are appointed by the shareholder and have a duty to act the best interest of the company. Next important feature of a limited company is capital raising. As you know that in sole trader, owner invests all its money. It has limited scope of source of finance. In shareholder, a limited number of shareholders, partner are invested money in business. But in limited company, as you know that company issues a share to general public, family and friends, and so on. It means that they have a lot of chance to get extra amount of money that can be invested purpose and that can be used for further business expansion. So limited company can raise capital by issuing share to investor. This allows the company to raise fund without incurring debt or give investor the potential to profit if company perform well. So company is not raising finance from a bank sometime, and if a company have profit, then they have to give it to shareholder, and if company do not have profit, then it means that the shareholder not get a profit or dividend. Regularity requirement. Limited company are subject to a range of regularity requirements such as filing annual reports, accounts, and complying the company's law. Failure to meet these requirements can result in fine or legal action. Taxation. Limited companies are taxed as separate legal entities and may be subject to corporation tax on their profit. Shareholders may also be liable for personal income tax on any dividend they receive. Now we discuss the advantages of limited company. One of the main advantage of limited company is limited liability. This means that personal asset of a shareholder are protected if company become insolvent or goes bankrupt. Second, perpetual succession. A limited company has a separate legal identity. It means it can continue to exist even a shareholder or director change. It means that it not affect on the company's registration, a company's working health if a shareholder or directors change. So company will running smoothly. Credibility is the next advantage. Limited company are perceived as more credible and professional than sole trader or partnership, which can help to attract investors and customers. Tax benefit. Limited company can often benefit from tax deduction on business expenses and low tax rate on profit. Sometimes companies can get a tax shield. Whatever company have borrowed from a debt instead of debt, then the government can give them a tax shield that they will not pay the tax because they have paid interest, and if they are paying interest, definitely that will be deducted after the interest given to the bank. Easier to raise capital. Limited company can raise capital more easily than sole trader and partnership as they can sell share to investor. Now we discuss the disadvantages of a limited company. More administrative work. Limited company have more administrative work and legal requirements than sole trader or partnership, which can be time consuming and expensive. Higher cost. Setting up and running a limited company can be more expensive than running a sole trader or partnership. Definitely you hire a auditor that can be definitely very expensive, who can generally combine all your assets, accounts, and definitely they have to check it out whether the company is running well or not. The charge is very high. The next disadvantage is that public disclosure of financial information. Limited companies are required to file annual financial statement with the company's house at the end of every year, which are publicly available, whereas sole trader or partnership do not have disclosed financial information. It means that there are no secrecy available for the limited company. More complex to set up. Setting up a limited company requires more paperwork and legal requirements than setting up a sole trader or partnership. There are different requirements from the specific Securities and Exchange Commission, like memorandum, article, and prospectus. So it is much difficult to set up. Now, next disadvantage is the limited control. Shareholders of a limited company have limited control over the management of a company, as decisions are usually made by board of directors. So, a shareholder cannot interfere in company's account because they appoint the board of directors, and board of directors definitely make the decisions. So, agency theory is applies there. Now we discuss the registration process of limited company. The registration process of limited company may vary depend on the country or region where company is being formed, but in general the process involves in following steps. First of all, you have to choose a company name. The first step is in registration process is to choose a unique name for a company. The company should be identical. The name should be identical or too similar to the name of existing company in the same industry. So your company's name is not similar and to already existing company, it should be identical. Prepare the company's document. The company's founding documents, which typically involve the article of incorporations and the memorandum of association, must be prepared. These documents outline the company's purpose, structures, and regulations. So here we discuss that what is memorandum of association, basically a document that can show the relationship between the company and the investors. That is mention company's name, company registration office, how much companies need to raise capital, and where their future plans, and company's registration office. On the other side, article of association document that show the relationship between the company and the workers. Inside the documents, voting rights, annual general meeting, and how the board of directors can be elected. These are all mentioned in the article of association or incorporation. Now, next step is that choose company's director and shareholder. Limited companies are required to have at least one director and one shareholder. The director are responsible for managing the company, while the shareholder are the owner of the company. This is the difference between the board of directors and the owner. Owner become definite, shareholder become a director as well, as depending on how much shares he owns. The next step is that register the company. The registration process involves submitting the company's document and paying any necessary fees to the relevant government agency or registrar. The company name, address, directors, shareholders, and share capital must be provided. The next requirement is obtain necessary license and permits. Depending on the type of business the company will engaging in, it may be necessary to obtain additional license and permit from relevant authority. Now, the next step is register for taxes. After the company is registered, it must register for tax with the relevant tax authority. This typically involves registering for corporation tax, VAT if applicable, and pay as you earn if the company will have employees. These above steps are a general guideline and may vary depending on the country or region where the company is being formed. It is always advisable to seek legal advice before starting the registration process to ensure compliance with all relevant law and regulations. So here we complete a topic of limited company. And next thing is that types of limited company. There are two types of limited company: private limited company and public limited company. Here in short we understand the difference between both of that, but I can make a separate video on both of them. The first difference is that in private limited company, shares are sold only to family and friends, but in public limited company, shares are sold to general public. A second difference is maximum shareholder are 200 in private limited company, but in public limited company, maximum number of shareholders are unlimited. Third difference is that in private limited company, shares are not sold in stock market, but in public limited company, shares are sold in stock market. Word LTD used at the end of company name, and word PLC used at end of public limited company name. Private limited company cannot issue shares for appealing the shareholder because the shares are only sold to family and friends, so there is no need to inform family and friends regarding the company's policy and other things. But for public limited company, it is necessary that they issue the prospectus for appealing shareholder, because shareholder want to know that what is company's objective strategies, and how much capital they can need, and what are the future plans, and so on. And here we complete the topic of limited companies thoroughly, where we discuss the features, advantages and disadvantages, and then registration process, and then lastly we discuss the types of limited company. At the next video we'll discuss the private limited company, and separate video on public limited company. Very soon we will see on my channel. Thank you very much. See you next time. Take care.